So this is the wrap up for the live market open for Wednesday, February 24th. We're seeing a stronger dollar across the board. Part of it is due to a worsening mood. Markets are less happy than they used to be. Oil is suffering. Iranians said it's ridiculous to cut production. The Saudis are not willing to cut and saying that OPEC will not be a swing producer. But these are not the only things. We had a few good days, so it's also a bit of profit taking. What's different this time is that we're not seeing we're seeing the US dollar stronger across the board. Okay, it's not losing ground against the euro, not losing ground against the yen, just strengthening against other currencies. Most significantly, the British pound. Okay, let's look at the charts. Euro dollar hugging 110, a bit lower on the day, not moving too much. Usually when we have a worse market mood, we're seeing a stronger euro. Same thing with dollar yen, not moving too much. Also here, a round number hugging 112. For euro dollar, support is at 109.60, resistance 110.70. But the biggest story remains the British pound. The British pound dollar fell under 140, reached a low of 139.64. Currently trying to move back up. A resistance at 140.50, 141.25, and 142.30. And to the downside, the low so far is 139.64, and maybe 139 is further support, where levels last seen in March 2009, nearly 7 years. Okay, we had opinion polls showing uncertainty, showing many people are still undecided, and the polls are relatively close. Okay, when we're talking about worse market mood, well, things are not that shabby this morning for the Canadian dollar, but in general, a weaker Canadian dollar with falling oil prices. 139.10 is resistance, 137.20 is support. Aussie dollar 71.40 to 72. Yesterday we were already above 72.20. But now the market mood is not as good. Okay, we are seeing in the past few minutes maybe some improvement, but in general, market mood is not so positive. Same thing with the New Zealand dollar. Between the 65.50 level and 67, we were already above 67. Now we're back down with the worst market mood. Okay, that's what's going on. Yesterday we had a few figures. One of the things that hurt the euro was the IFO business climate, which showed more worries about the future. Housing data was positive in the US, but consumer confidence was bad. All in all, mixed data. The Bank of England is still relatively hawkish, but that's totally ignored by markets which are just thinking about the next words from Boris Johnson, the next opinion polls regarding Brexit. 4 months to go. It's still, of course, a big topic. What do we have today on the agenda? Basically nothing of high importance in the European session, but we have quite a few interesting events around 3 GMT. At 2:45 we have the market services PMI, snapshot of the US, the biggest US sector according to market. At 3, the most important event for today, the new home sales release, very important for economic activity overall. Let's see if it continues beating expectations like we had with existing home sales and like, well, other housing figures which look okay. For the wider market mood, crude oil inventories are expected to rise quite a lot because yesterday API was surprising with the big buildup in oil inventories. Okay, so of course, more supply of oil, lower oil prices, worries about the global economy, and of course, dark mood. And late at night, we have bullish bullard talking from the FOMC and Australian capital expenditure. For those trading the Australian dollar, this is a top-tier event because the RBA looks at investment, at capital expenditure towards its next decisions. So we're in the middle of the week. We have so slightly worse market mood. The focus remains on the British pound, but also the euro struggling, euro dollar with 110. Let's see how things evolve. Let's see if we have more questions. Yeah.